Thanks for joining us for today's episode of The Capitalist Investor. Once again, you got Mark and Derek.
Mark, what's going on, my man?
What's up, buddy?
How you doing?
I'm all right, man. A little tired, 5 a.m. morning.
That's an early morning.
Yeah, it's been a full day of work for me, and it's only 2 o'clock.
I know. Need to get home, take a nap.
Yeah. Wish I could have done that at lunchtime.
If it makes you feel better, my kids were up between like 3 and 4 this morning.
Ooh, yeah, that's always fun.
Yeah. So
It's really fun though.
What's really work at
I'm
5?
a one-upper, so I got to one-up you, right? So, about a week and a half ago, my dogs woke up at 4 in the morning, and I decided I was going to let them out to pee without opening my eyes, and that didn't work out too well. I walked face first into my door and busted my nose open.
No. Oh man.
We just hopped back in bed when I was done. I'm like, oh, that sucked, and then I woke up bloody faced.
Oh no, that's not good.
Not good.
That's way worse than what I had to deal with.
And then had to do TV for weeks straight. All right, man. So fun show today. As all of our listeners know, we do have a new president, President Joe Biden. Is that what he goes by?
I don't even know, man.
I don't know. I saw him speaking at the mayor's stand, and he's got a lot of names, man. Joseph R. Bo Biden Jr., the 4th, the 8th. I mean, a lot of stuff going on there. But we do have a new president. So kind of the theme of the show today is let's judge all the presidents. We're not going to go through all of them because we don't have time. So let's judge all the presidents based on the stock market performance throughout their presidency.
Yeah, I thought it was a good idea for a show, man.
So since we're not going to bore everyone by going through all 23 of them, if that is how many we've had, is that correct? 23?
Yeah. So basically it's the last 23. So it starts with Benjamin Harrison,
okay,
who was president between 1889 and 1893.
Yep.
And obviously everyone knows he's the great-grandson of the 9th president, William Henry Harrison, who actually signed the Declaration of Independence.
I did not know that. Thanks for the history lesson.
And before we get in, if you do like history, I actually just watched Grant on the History Channel. It is a 3-parter, I believe.
Yep.
It's long, but honestly, I watched it in like 2 days. It was so good.
Yeah.
So if anyone out there likes...
I'm looking for stuff to binge, man.
I mean, it's not, the Tiger King or anything like that,
No,
but
that was
it was
amazing.
definitely interesting.
He didn't get pardoned, by the way. Kind of disappointing.
It really
Kinda
was.
disappointing.
I heard he had a limo waiting for him outside of jail.
With a makeup crew. All right, so we're working with 23 presidents here of the 46, ironically, half of them, right?
Yep, exactly.
So I don't know how Kiplinger's arrived at these because this is where we're borrowing this material from, but they picked 23 of them. So,
Yep.
And obviously we can't count number 46 because he doesn't have a track record yet.
Right.
So I guess it's 23 or 45.
Yep.
So all we're going to do is we're going to hit on the 4 worst, and then we are going to hit on the 4 best.
Right.
So let's start with the worst of them all.
All right. So the worst of them all, as you may have guessed, maybe not the name because it's not a household name at this point, but Herbert Hoover was definitely the worst.
Yep.
By a lot. His market performance was about a minus 30% per year.
Ew.
But he obviously presided over the Great Depression.
Yep.
So he
Bad timing.
Some really bad timing.
Bad timing.
So he took over, I believe, in March, which I'm not sure how that happens. But he took over in March, and the Great Recession started, I believe, a few months later in August.
The Great Depression.
Great Depression, I'm sorry.
Yeah, we'll get to the Great Recession in a little
Yes.
bit.
Actually, next.
That's part of this. So yeah, Great Depression, he took over March of 1929, right? When was the crash? A couple months after that?
Yeah, August, I believe.
Okay. So, and he was a one-term president. Poor guy.
Mm-hmm.
I mean, he just had to deal with a whole bunch of absolute nastiness.
So basically, it was a lot of bad timing, but he also put into law the Smoot-Hawley tariff, which I did some research on. It was basically adding more tariffs into an already bad situation.
Yeah.
This happened after the Depression started.
Oh, okay.
So you basically made it worse.
Yeah, he made it worse.
Yep.
That's a big screw up. All right, Herbert, sorry, buddy. You're the worst. All right, moving on to the second worst. I was surprised to see W
W.
George W. Bush. He's the second worst.
Second worst. Yep.
Also, a lot of that could be timing as well, because he took office at the peak of the tech bubble.
Right.
Right? Of the dot-com bubble, whatever you call it. And he left office unceremoniously right at the depths of the Great Recession.
Right.
Right? The Great Financial Crisis, whatever you call it. So just kind of the timing, obviously. Oh, do we do the annualized return for Herbert Hoover? Negative 30.8% per year.
Yep.
That sounds like you went to zero over 4 years. I mean, how does it get much worse than that? Negative 30 per year.
Yeah,
it's terrible.
The market lost 77.1% of its cumulative value.
There you go. That's how much you lost. Sounded closer to 100% to me. All right, so W was down 5.6% per year.
Right.
But also that is, we all know that when you buy at the top of a bull market and you sell at the bottom of the next bear market, your returns are going to stink.
Right.
So I think just kind of the timing of his presidency worked against him. But he does have, on his record, a very, very expensive and controversial war with Iraq that lasted years and years and years.
No doubt.
Where those funds probably could have gone elsewhere.
Which also seemed to be the beginning of the end for, Republicans caring about spending.
Yep. Yeah, exactly. Now everyone spends everyone else's money all the time.
Right.
And we're looking at trillions and trillions more this year.
Right. Which
all going to the wrong places for the most part.
We're just borrowing from the future, which I don't think 90% of the population understands.
Well, it's like the market is living off a high right now, And what happens when the high wears off? That's when you get the hangover.
Right.
And we all know what a hangover feels like. It is not pleasant, but that's what's in store for us, right? Lots of euphoria, lots of high, and then when that wears off, you got to pay the price, right?
Yep.
So W was down 5.6% per year. Granted, the dude took over at the top of a bull market, got out at the depths of the Great Financial Crisis, which might be the worst recession we will ever see in our lifetime.
Yeah.
Because you look at the pandemic from 2020, and that recession was so short because the Fed and the Treasury know what to do now.
Right.
Zero interest rates and just hand out trillions of dollars.
Just print as much money as you can.
So I don't know that. Look, man, it's dangerous to think this time is different. I get that. We shouldn't be thinking that. But I think it's okay for us to think that because, I don't know if we're ever going to see a multi-year recession again. If we didn't experience a depression from the pandemic, I mean, it seems like we're just willing to throw money at problems and steal from future generations. That's essentially what's happening.
Exactly.
Right? So you'll still pay the price, but you're going to pay it slowly over the course of several decades.
Right.
So, W, he had the 9/11 attack work against him. He had the controversial war in Iraq, and then he, had Lehman Brothers and Bear Stearns go belly up.
Right.
So it was
not good.
It was a tough 8 years, man. Tough 8 years.
It really was.
I liked W. Thought he was a good guy.
Yep.
All right, on to Grover Cleveland. So this, interestingly enough, I mean, he was president in non-consecutive terms.
Right.
It's kind of interesting.
It is.
That's what Trump thinks he's going to pull off.
I'm not sure about that anymore.
Yeah. I was confident that he had the opportunity to make that happen until he cost the Republicans the Georgia election, right? Because they did win it. They won it in November, and then his consistent complaining, I believe, turned a lot of voters off, or maybe it caused more Democrats to show up at the polls to cancel Donald Trump, because that's what's going on. It's the whole cancel culture thing, right? But anyways, so Grover Cleveland was from 1893 until 1897, and he had to deal with the panic of 1893, which was the banking system basically collapsing.
Right.
Right.
That was the main catalyst for the Great Depression.
Yeah.
Yep.
So he was down 4.9% per year in what I believe was that his first term?
Yes.
Yeah.
Because it was 1893.
Okay.
Yep.
Up the fourth worst, Tricky Dick.
Right.
Richard Nixon. A lot of people think he was probably the most intelligent president, but also the sneakiest. Right?
That's for sure.
You know? Down 3.9% per year. Obviously, most people are going to remember Watergate and stuff like that. But what really hurt him was, I believe, the removal of the gold standard.
Right.
Pegging the dollar to gold reserves and turning the dollar into a complete fiat currency where it had no value associated with it,
Right.
you know, according to some physical gold.
And that had led to super high inflation.
Yeah. Yeah.
Yep.
So that was the beginning of crazy inflation, which choked off stock market returns.
Just so no one's confused out there, I actually don't have a sponsorship with the History Channel, but the Richard Nixon special on the History Channel, where they basically play back his tapes, was really good too.
Yeah.
I don't know the name of that off the top of my head. I watched it several years ago, but it was really good and insightful to what was going on back then.
Yep. Well, maybe you should get some sponsorship.
I
from
really
the History
should.
Channel.
You know, History Channel. If
you
you're
plug
listening,
that well.
you know,
Send Derek some money.
or at least a mug or something. You know,
Send him some swag, man. He needs a History Channel hoodie. By the way, our hoodies are legit. I think you want one. I think you should give us a 5-star review. Send us an email at info@swpconnect.com. Let us know you did that, and we will send you something really cool. But the hoodies are legit.
the hoodies are amazing.
Yeah, they got like the high neck thing going on.
Especially in wintertime in
Which
Cleveland.
I have a bunch of like the older hoodies without
Right.
the high neck. I refuse to wear them anymore.
I'm trying to find those.
Yeah, they all have to be the high neck now.
They're amazing.
Oh my God, so much better. If you don't know, now you know. Okay? All right, so let's get on to the 4 best. Where are we at here, buddy? Where are we at? So
number 20 on the list, I believe, if I've counted correctly. 20,
Number
21,
20.
22, 23. Yep.
Yep.
So number 20
Papers are all out of order. So who's number 20?
would be Donald J. Trump.
Mr. Trump.
So he has an market performance annualized of 13.7% per year. Now,
Not too shabby.
that is pretty amazing where you consider where he started from.
Absolutely. We all know that average annualized returns are going to look much better when you take over at the bottom of a bear market,
Right.
like the next guy on our list did.
Yep.
Okay. It is much harder to do that when you take over when the market is at all-time highs.
Right.
And that's exactly what Trump did. He took over at all-time highs, and since my papers are out of order, what was his annualized return? Like
13.7%.
13.7%. That is pretty impressive.
Yep.
Pretty impressive. And he did most of that through lowering taxes.
Right.
Right? I mean, if you think about it, the C Corp tax rate went from what, 35 to 21%?
Right. Yep.
So obviously, if you lower taxes, businesses have the opportunity to reinvest that money, whether it be in employees or investments within the company so that they can grow. And that's exactly what happened.
For sure. And, you know, and that's, I remember when he took office and, you know, he was proposing all these different things and the, you know, quote unquote experts were coming on the, you know, the various channels, basically saying that that we were already at the top. There was no room to go up.
Yep.
So, you know, when you read an article that has an expert, you know, that isn't named or cited, just be careful because you don't know who these experts are anymore.
Yep.
We've been through that with the corona as well.
Yep.
But Trump, you know, as far as market returns go, very, very impressive.
Yep. All right, moving on to the next gentleman, President Barack Obama. He's number 3 on our list, third best performance, slightly edging out Donald Trump. He got 13.8% per year. That's from January of 2009, which we all remember the S&P had been cut in half
Right.
at that point, right? from where it was in October of 2007. So, you know, when you're coming off a 50% decline, your returns are going to be higher.
Right.
So, and then he took that through January 2017, which was 8 years into what ended up being the longest bull market in the history of the country.
Right.
Yeah. So, hey, man, I mean, the guy had an 8-year bull market under his belt because he took over at the depth of a recession, right? Still good, 13.8%.
Absolutely.
Fantastic returns.
But, I mean, can we really attribute this to anything more than timing? I mean, I don't know what policy.
You know, that was going to be my main takeaway at the end of this.
Oh, sorry.
It's all timing. Except for, as you said, Trump's timing was terrible. He took over at the peak of at all-time highs in the S&P, and he still cranked out 13.7% per year.
Right.
That's very impressive. He's the only one where timing was really had nothing to do with any of the equation.
Right.
Right? Very impressive. Thanks for stealing my thunder.
Sorry, man. We'll edit this out later.
Next up, Bill Clinton, 15.2% per year. So he was January of 93 through January of 2001, and that's your .com bubble, right? Pets.com, you know? What else do we have about him? Do you remember America Online back in the day?
How could I forget America Online?
Dialing up.
That was my...
Can you imagine that the stock market was on fire because of companies like America Online?
Oh, yeah.
Dial-up internet. Remember how slow that was?
It was painfully slow.
God.
But it was still mind-blowing technology.
It was unbelievable.
You know, it was...
so cool. It was definitely a game changer, obviously.
Absolutely. So, but yeah, you know, that's... You know... I don't want to steal more of your thunder, but do you see any similarities between the end of the 2000s to right now as far as valuations go, or types of companies that are getting huge numbers?
Yeah, all these IPOs.
Yeah.
Right? I mean, 50%, not quite 50, it might be like 48% of the Russell 2000, so that's small cap stocks, they make no money.
Yep.
So... the parallel that I see, D, is that 5 years ago, 10 years ago, people were talking about PE ratios, PE multiples, valuation mattered. Today, when people discuss valuation, they don't talk about PE anymore. No. It's all about TAM, total addressable market, which is basically just a cockamamie way of saying what's the company's potential.
Right.
They operate in the EV market, and the potential is trillions of dollars. Therefore, the company should be worth trillions.
Right.
Like, come on, man. Like, seriously, companies are all being valued off of their potential today.
Oh, yeah.
You know? A lot of these most recent IPOs are trading at just egregious multiples, or let's not even say multiples, because multiple is an impossible calculation for some of them since they don't make any money.
There's no E.
Yeah, so let's just say they're trading at egregious valuations.
Right.
You know, but that's the biggest parallel I see. What do you see?
Yeah, absolutely. Especially, you know, because, you know, I get asked this stuff a lot more now than I would even... you know, this time last year, quite honestly.
Yep.
Just with all of the Robinhood traders out there, the Bitcoin, I get a lot of questions from my friends, you know, asking, you know, should we be buying this stock and that stock? And, you know, it's always good to get in until it's not, right?
Yeah.
So some of these companies that are just run up so much over the course of the last 12 months, based nothing more on potential. You know, this is just kind of the public service announcement of this podcast.
Yeah.
You just really got to be careful. You really need to understand the story if you're going to plug down big dollars to, you know, buy a stock of some of these companies that don't have any earnings or even the potential of earnings for the next couple of years.
It's a game of hot potato, right?
So
once the music stops, whoever's holding the bag or the potato, right? You lose. You lose. Yep. So you want to ride out that bubble as long as you can and figure out how to, you know, shine your crystal ball enough so that you can see when the music's going to end and get out.
Yeah.
Right? All right, on to...
Number one.
Number 1, Calvin Coolidge, the Roaring 20s.
Right.
So the one thing all 8 of these people, with the exception of Donald Trump, have in common, as you said, is the timing. Like, you were either in at the right time or in at the wrong time. Obviously, there were a few errors that were made in some of the 4 worst, like with Nixon, triggering inflation by removing the dollar from the gold standard, which, by the way, as bad as that was during his presidency and following his presidency, that's why the market's on fire today.
Yep.
Because the dollar is no longer pegged to gold, that's why trillions and trillions of dollars can be printed and distributed to U.S. citizens without fear of debauching our currency.
Right.
Right?
Really is.
So Nixon took one on the chin. We can point fingers at him and say, hey, your performance stunk because you removed the dollar from the gold standard. But you look at pretty much everything, I guess, Bill Clinton, W., Barack Obama, Trump, high spending, lots of fiscal stimulus.
Yep.
Right? So these guys wouldn't have done what they did without the dollar being removed from the gold standard. So,
for sure.
Kind of took one for the team there, I guess.
So back to Calvin Coolidge. We'll run through his stats here real quick. So he was president from 1923 to 29, and his annualized market performance was 26.1% per year.
Man, that's like twice what Obama and Trump did.
Yeah.
At number 2 and number 3. That's pretty crazy.
It really is.
A hero among small government conservatives for his modest, hands-off approach to government. I like the sound of this guy.
Yeah, I really do.
Can he come back? Wow. But obviously, as he left office, the world was set to fall apart.
Right.
Right. He left March of 1929. All right. Any final thoughts from you, D?
So yeah, no, I'm sorry I stole your thunder there a little bit, but I believe that since really Donald Trump was really the first person to talk about the market,
Yeah.
because you can see here that a lot of it's due to timing.
It is.
So if it's going down, right, you don't want to necessarily tie yourself to that sinking ship. But Trump did, and it wasn't
sinking. He tied
sinking.
himself to the most dangerous ship. I'd rather tie myself to the ship that's half sunk,
right?
Because you know it's going to rebound. He tied himself to a sky-high stock market valuation at a point where stock market returns should have been below average throughout his 4 years. And I'm not trying to say that he's the best thing since sliced bread, right? People have their differing opinions on him. On his lack of bedside manner, right?
Yeah.
I happen to think that a lot of his economic policies were good. I think he could have handled himself a little differently along the way.
Yeah, no question.
I think that was kind of the nail in the coffin for him, unfortunately. But yeah, I mean, it was impressive what he did. Whereas everyone else, they had the good fortune of being in office at the right time.
Right.
Right.
And now I think people who voted for Donald Trump the first time around, that was one of their main points. It was, hey, this Obama administration, it was starting at a low point, and the recovery was just so darn slow. It didn't seem that it was all, full steam ahead, right?
I would agree with that, D. So another takeaway is Barack Obama came in third place, third best. I think his third best was weak. That was 13.8%, I think you said. 13.8% per year coming off the bottom. It should have been like 17, 18%.
No
he
question.
took over at the depths of the worst recession that we've seen in our lifetime.
Right.
Right? So, yeah, I think his return should have been better. But you're right. That's probably why people wanted to see something a little different.
Right.
Faster growth, right?
And lower taxes, less red tape, simple things to get the money back into the hands of the people.
Yeah.
Right?
Well, now we just manufacture golden eggs and send them to everyone in the mail or via direct deposit.
Yep.
Yeah.
So yeah, I thought it was interesting taking a look at all these presidents and their actual results as it relates to the stock market. Obviously, there's a lot more than, you know, just stock market returns to being a president. But
yeah, I mean, do you think you can judge the quality of a president based on the market's performance throughout his term?
No.
It's a factor. It's a factor.
Yeah, for sure.
Right? But it's not, you know, the be-all, end-all.
Right.
Right? But still kind of an interesting exercise we just went through. The most surprising thing to me was seeing W at the bottom. But again, that was all timing. You know? I thought his policies overall were pretty good, even though they may have been Dick Cheney's policies and not his. Right?
They did work for a period there. We came out of the tech bubble in like 2003, and it was going well until 2007. And, you know, there very few people saw that financial crisis coming. That's why it hit so hard. Should he have seen it? Yes, absolutely. Should his team have seen it?
He should have had economists warning him that people had loans on 5 different houses.
Right. Yeah.
You know,
it was a ticking time bomb.
It was, you know, the Fed with their low interest rates, you know, causing people to take out more mortgages, no documentation loans. Yeah, I don't think you can blame that on W.
Yeah.
Love calling him W. Love it.
W. I actually saw him speak once. It was pretty awesome.
At an AE event?
Yep.
Yeah, that's pretty cool. I wish I was there for that one. All right, man, that wraps up today's show. If you have any questions, email us, info@swpconnect.com. Check out the show notes. You can check out the YouTube channel, all that good stuff. If you write a 5-star review, email us with a screenshot after you write it, and we'll send you some swag. Like D and I were just talking about, those hoodies are legit.
No doubt.
They're fire. You want one. You want one. And you want one of these awesome fake Yetis, too.
Yes. They're nice.
Yeah, they are.
They work good.
Yeah, I mean, they're fake.
Yep.
It's a fugazi, but it's okay. All right, everyone. Thanks for joining us. See you next week.